Liquidity is a critical factor in binary options trading, as it determines how easily assets can be bought or sold without significantly affecting their price, and it varies across different markets. High liquidity markets like major currency pairs in Forex trading, such as EUR-USD or GBP-USD, are preferred by binary options traders because these assets experience substantial trading volume, tighter bid-ask spreads, and smoother price movements. Such conditions allow traders to execute trades efficiently, especially during high-activity periods like the overlap of major market sessions, such as the London-New York session. In contrast, commodities like gold and crude oil also tend to have decent liquidity, but may experience higher volatility, especially during times of geopolitical tensions or major economic announcements, making them suitable for traders who thrive on quick price movements. Meanwhile, stock indices like the Nasdaq 100 or S&P 500 offer a different liquidity dynamic. These indices generally maintain stable liquidity levels, particularly during market hours when their underlying stocks are actively traded. However, liquidity in stock indices can decline during after-hours trading, causing wider spreads and increased volatility, which traders must factor into their strategies. Individual stocks present another layer of liquidity variation, heavily influenced by the stock's market capitalization and trading activity. For instance, highly traded stocks like Apple or Amazon tend to have higher liquidity compared to smaller cap stocks, making them a more stable option for binary options trading. However, stock trading is typically limited to specific exchange hours, unlike Forex, which operates 24/5, offering greater flexibility. Cryptocurrencies, such as Bitcoin and Ethereum, provide round-the-clock trading opportunities but come with lower liquidity compared to Forex or stocks due to their smaller market size and susceptibility to sharp price swings triggered by market sentiment or regulatory news. This volatility can lead to larger spreads and increased risks, requiring traders to be cautious with their positions. Moreover, exotic currency pairs and niche markets like certain agricultural commodities or penny stocks generally have lower liquidity, leading to irregular price movements and wider spreads that make precise trading more challenging. Binary options traders often choose their assets based on liquidity considerations, as higher liquidity markets enable smoother execution, more predictable price patterns, and better alignment with technical and fundamental analysis. However, traders must also account for specific market conditions, such as economic reports, central bank decisions, or corporate earnings, which can temporarily impact liquidity even in typically stable markets. Utilizing demo trading accounts is an effective way to understand how different levels of liquidity affect trade execution and market behavior without risking real capital. By recognizing the liquidity characteristics of various markets and aligning their strategies accordingly, binary options traders can enhance their ability to execute trades effectively and achieve better trading outcomes in this fast-paced trading environment.